oil prices have reached 13-month highs as a cold snap in the U.S. hits crude output. WTI and Brent are both well above $60 per barrel. Now, Texas, the largest energy-producing state, is in its sixth day of deep freeze that has caused major power outages. At least a fifth of U.S. refining output is shut. That translates to roughly 1 million barrels a day. The cold snap is not expected to let up until this weekend, but analysts say it could be weeks before production is fully restored. Amrita Sen from Energy Aspects joins us. Amrita, U.S. oil supply could be disrupted for weeks. How far do you see prices rising as a result of that?
Yeah, like you said, look, prices are already reacting very positively to these shut-ins. Our estimates are that Permian, the biggest basin, starts to come back by middle of next week. And then the last basin is by the end of next week. So based on that, I do think prices are at least not going to fall and kind of continue to rise a little bit through the course of the next 5 sessions. Now, I will warn that this is based on the assumption that there's no significant damage to pipelines in particular, which have frozen over, and natural gas pipelines included. So if, as crews go back, they detect damage, because this is unprecedented, we've never, ever had this scale of outage before, then the price increase could continue even beyond mid next week.
And assuming that happens, how is this going to impact the global oil market?
The U.S. is a big exporter of crude right now. It used to export about 3.5 million barrels per day before this outage. So we are absolutely expecting U.S. crude exports to come off. That's why Brent, which is the global benchmark, has risen in price, because now refiners are looking for alternatives. The other thing to bear in mind is that we actually also have a lot of U.S. refineries that are shut down as a result of the freeze-off. Now, that means they are using less crude for sure, but they're also producing a lot less products, which means a lot of refineries in Europe will try and make up for that lost product. So in general, from both sides, it is actually very bullish for oil prices, and that's why we've seen the rally that we have.
Amrita, there are also reports that OPEC Plus will likely increase production after April, given the recovery in prices. So would that put a lid on further price gains?
I don't think so. Look, Saudi Arabia, when they announced that they were going to cut 1 million barrels per day voluntarily in January, they were very clear it's a 2-month only cut. They've done this in the past, last year as well, when they got an additional million cut. It was 2 months again, and they brought it back. So this time, the 1 million barrels per day, which is a voluntary cut from Saudi Arabia on top of the ongoing OPEC Plus cuts, will definitely come back in April. The market knew that. I don't think the market is going to be surprised by that. So no, I don't think so. Now, the rest of OPEC Plus can only increase production per month for now by 500,000 barrels per day till they get to phase 3 of their deal. Given how tight the market is, even if we sell off a couple of dollars on the headline sentiment, the market will easily absorb these barrels, and we will start to go up again, even if we get some volatility. I think the more interesting thing with the OPEC meeting is if Russia, UAE, and others start to say, look, this is fine, we will start slowly increase production, but what about in the second half of the year, as demand is picking up with vaccination, we will need to increase production a lot further. I think that's where tensions can really start brewing again.